Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades through our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to look at how you can switch between multiple different broker accounts directly from within the ORATS dashboard. We'll also look at the stock and option scanners to find a trade for this week. Before we get started, Matt, do you want to share your screen and go over our calendar strangle trades from last week?
Yes, and guess what? We're winners on almost all of the trades, and if not, it will be soon. So this has been a pretty good run that we've been on, Tyler.
It has. Yeah, we've had very few weeks where we haven't been making money.
Okay, so we had Expedia and SPY from back about a couple weeks. So let's look at those first. So Expedia, it looks like we're just barely up. We paid $3.55 for a. So we're long the middle and short the outside. So $5 was the most we could make this way. $4 is the most we could make. So we paid a lot for not making too much, but we have 5 days left. Expedia is at 123, so it's well through this. The 114, 118 call spread that we're long. So that should be worth $4. I don't know if you saw it, but it just switched to 386. So I think we're gonna we'll wait till next week, and we'll end up getting the whole boat, or at least close to it. Maybe we'll offer it out at like 395 or more. But that looks like a pretty good win right there on Expedia. And then we just had to wait for that one. And then we have a SPY open one, the 132 butterfly. So it looks like a butterfly, but it's a broken wing. It shows us losing money right now, but we're right at the peak of the money making part of it. So we just need to, again, hold on for 5 more days on that one, and that will be good. So those are the two that we've had on for a number of weeks. And then, as you mentioned, the two ones where we were short short-term strangle, and very long-term strangle. So I just have pictures of it now since it already expired. Let me turn on my writing tool. So basically, we were short the June 4th of a strangle. We got 40 cents. And then we paid $1.27 and $1.68. So our net was worth 153. We paid 157 for it. So let's look at what happened. So on 6/4, the stock closed at 540. So we were safe on that strangle. So they both expired out of the money. And our straddle that we were long finished at 199, so that was a pretty good winner. Paid 157, sold it out at 199. The other was very similar to it, but we had 4 days on it. The 198.209 we sold for not too much, 23 cents, and then we bought the straddle, long-term straddle, 138 days. For 77 cents. So our net, it was worth 55. We paid 57 for it. Let's see what happened to it. So it the stock finished at 203. So both of those, that short strangle at 203 was way out of the money. It didn't get to 209. And so then the other part finished at 74.5 cents. So we were profitable 57 to 74.5 cents. So pretty good trades there, Tyler.
Yeah, really, really interesting. Those calendar strangles are a very neat trade. Requires you to do it every week sell that strangle, but it'll be very profitable over time. So
yeah, well, I think that what I've noticed just looking through the back test, it does work most of the time. Even when it doesn't, you don't end up losing too much since it's pretty wide, pretty short term. And if you look for some signals in the market, i.e. rising volatility, falling contango, then you could avoid some of those days in the market where there's duress, and those strangles wouldn't do well. So today I want to talk about, so if you have, what I like to do is I like to find certain brokers that where I could trade certain strategies, or even you could even open sub brokerage accounts in certain brokers and be able to put your positions in there. I think it's a good way to figure out what certain brokers are good for. It's easier to analyze what's going on, and sometimes you want to keep a certain amount of money and certain brokerages. So I have Interactive Brokers, TradeStation, and Tradier as brokers for my positions. Tradier, I have a couple of different positions in, and then so I like to do different types of positions. In some positions, like Interactive Brokers, they don't want you to do sometimes. The leverage ETFs and all that are difficult to do in Interactive Brokers. So what I like to do is I have in EXPE, I have that short strangle, long strangle going, and in Interactive, and then in Tradier, or actually in TradeStation, I have this this other trade that I'd like to get into today. And we could show it here since we showed the strangle last time. Why don't we show the cheap calls and cheap put on individual names today? For example, I had a long call on NICE, NICE, and sold out half of it, but the stock went up 4.5%. So today, so it's nice to come in and see that happen. So we have some I have some scans that I like to do in order to find these cheap calls and puts, and you only need, and I'll invest maybe $100 in each name, in hopes that something just goes off. But you could lose a lot of you could lose your money. In Starbucks, I was up. And now I'm down. So today I lost 330. In total, I lost 104. So you could tell that I've only invested about $100 per name. So I'm down on Starbucks now that it's up around its 72 put is the one that I had on in that one. So if you do that, I think you could come in and be happily surprised on some of these days. Halliburton's up. I have that call today, so I'm up in that particular name. So you want to see these, how I set up these scans, Tyler?
Yeah, let's do it. So these are cheap calls and puts, and you're looking at the stock scanner first.
Yeah. What do you want to do, calls or puts first?
Let's do calls first.
All right. Mm-hmm. So all symbols, I have a few things like since we're buying, I want our forecast over implied to be about 10% over, not a huge amount. I want the historical volatility to be over the implied, so I want that to be moving a bit. So, and that's short term, that's only 5 days. So I want that to be a third higher. Stock price, I want it to be between 8 555. I don't want to pay a ton, and I don't want extraordinarily small stocks. I want vol between 15 and 44. Again, I don't want to pay too much for these out of the money calls. The ETF relationship, I want that to be under a certain amount. We could talk about that in a different show. A percentile, I want the slope percentile to be high. So that means the puts are more expensive than the calls. And I want at least 222 option volume for this particular set of stocks. And so if you do that, there are only 7 stocks that meet CBE, TRP. You know, you can see the ones here. And then, of course, if you've watched the other shows, we could go to our option scanner and set up the option scanner to bring in buy cheap calls on these. This is the scan. These are a bunch of my scans. So it brings in the scans, and these are the stocks that we just mentioned, CBE, TRP, DRIP, and et al. So the long calls that I'm looking at are 10 deltas between 2 and 23. It's 30 days to expiration, a minimum of 15, a maximum of 155. I don't think I have any other setups there other than in here. I want to have the smooth edge, the S edge, that usually is right around the market. I don't want to have too much or too little edge there. So 3% is what I have set there. Probability of profit, I want that at least 4. And then my delta, I want at least 10. And then the price, I don't want to pay over a 0.5%, I guess that, or 0.005 of the stock price. So that leaves me with, from 7 stocks here, that leaves me with just one CBE. So that we'll look at CBE. You know, we don't expect much from these. And then I sort these by a little bit of distribution, a little bit of forecast, a lot of this DTC, which how much it costs for each delta. And then, so that's just delta divided by how much money you're paying. And then, of course, I always like this reward to risk probability of profit trade-off to be high on both accounts. And look, we got another one, Wes. So maybe we'll put these 2 on, Tyler, in the paper trading. And you remember how we switched between certain brokers. So now I'm going to go to paper trading and do these trades for next week. All right, so let's take a look. Let's go back to the scanner. Let's put on the West trade. It's worth 10. Or no, it's actually worth 18 cents. Looks like we have one of these stocks that only trade in 5 cents, so we're going to have to pay 15 cents for this. So let's do that. Let's force that. I like to do up to $100 worth. So let's try that. See how that looks. 90 bucks. All right. So we'll put this on. I'll take a picture of it actually, Tyler, so I don't lose it.
Your max DTE is pretty high on these. It looks like it's a little over 100. Is the cheap calls strategy, like 3 months away, or is this like a shorter term or a longer?
No, you're rarely going to get that. I just put it in there, but you're rarely going to get that for the constraints that I have on percentages and that I want to pay and all that.
Okay, so you're more likely. What you're saying is you're more likely to find these cheap calls further out, like further away, like 3 months.
No, that's the opposite. This could be 3,000, but it'll never come up. It's just because I'm looking for stock. What's the constraining factor here is a lot of how much I want to pay. 0.5% of each stock price. So we're not gonna get many that meets that criteria.
Gotcha. Okay.
Yeah. So you'll notice that the dollar value is really low on this one. All right. So we did. What do we do? WAS. Now we have TRP. And again, I think we could do 7 of these. I think we're going to have to pay the offer, so we can only do 6. Because again, this is most likely you're going to need to pay in increments of a nickel, because these are pretty thinly traded ones. So we'll do this trade as well. Take another picture for next week just to make sure.
You're saying they're pretty thinly traded. Do you think it'd be a good idea to add a filter for that in the stock scanner, or is that something we can only do in the option scanner?
No, we want it to be thinly traded in a lot of these cases. As long as we could get filled, it doesn't matter if it's thinly traded, because we're just kind of holding on for a big pop. that happens.
Gotcha. Okay, so we're not really too worried about the liquidity on these then.
Right.
Okay.
As long as we can get filled. And if we don't get filled, big deal. So we just put them out there. You know, I'm paying the offer on these because it's only 5 cents wide. So I could buy 10 of these. I'll take a picture of that. And all right, so that we have three or four call. Say we have 3 fills in the call. So let's go. Let's do the puts now, Tyler.
Okay, so you're being pretty generous on the fills then, because this is a paper trader account.
Well, yeah, it just depends on that one. I probably would have paid the offer because you're not going to get filled probably at 5 cents, and it's worth 8 cents. So let's just look at it again. So, you know, we have it worth 7 cents. It's 5 cents at 10 cents.
Yeah.
And it only trades in nickels. So you're probably never going to get filled at 5 cents.
Okay.
You could put it out there, but, I put it out at, just 10 cents.
Gotcha.
I don't know. All right. So let's go back to the stock scanner. There's some small changes that we'll make, but you'll notice a lot of the data, a lot of the search terms are the same. So again, we still want to forecast over earnings of 10% in our favor. 5-day historical ORATS volatility over the implied, still 33% over that. So it's moving around more than the implied. Stock price a little bit higher in this one because we're buying puts, so we want some room to move. The implied volatility is the same. The HV, XV is the same. We want some edge there, 20% edge there. But the slope percentile, you'll notice, is the opposite, right? So before we wanted a steep slope when we were buying calls, steep put slope, and now we want a cheap put slope because we're buying puts. So, but I don't want a 0 or, so 8 is the minimum. The max is 44. So I just want it under 50 basically, but not like around 0. And then I have a slightly higher option volume put for here on the puts because I just wanted a more liquid stock for these puts, and I also want to be able to get out easier on the puts for some reason. So, and we're able to get more. So there are 13 stocks here, so I was able to get a little bit more liquid. Does that make sense, Tyler?
It does. What do you think about adding maybe like an analyst ratings filter to this, considering their puts, we want the stock to go down. Should we add anything that's like a fundamental indicator to this, or do you think that's unnecessary?
You could, but we're basically just looking for a surprise move to the downside, or if the whole market goes down, these are going to be cheap puts to have. So I just want to have a somewhat volatile name, where we think the vol is low, and where the slope percentage is low. So it's mostly just an ORATS thing. We want some cheap puts that we think are cheap.
Gotcha. So we don't have any thesis on the direction of where the stock's going to go. It's
yeah, you don't really care. I mean, I see what you're saying. That it would probably, if I trusted the analysts, I'd probably do that. But it's not something I would think about right off. All right, so let's look for that option scan now, that buy puts one. And here's that Dell and Cisco and all that. So let's take a peek at these. So we have some names here, and it's pretty similar. The rankings are similar here. The S percentage similar, probability of profit 4%. I put a delta in here. I was getting some really low delta, so I wanted a current delta in there. And then my price, I think it was 0.5 before, so I want to pay less on these. So so there are some of the puts. I might actually consider going a little bit higher on that. I think we were 0.5 before. Maybe we'll go let's try 0.35. Yeah, so we got a bunch more there. All right, so what do we got? So a lot of Dell. So let's do a Dell one. 20. So this is another one, Tyler, where we're going to probably have to pay the middle number. So I might leave it. If I were just working it in the market, I would probably just leave it at 20 cents and see if I got filled. But since we got a show to do, we got deadlines. We'll do it this way. And then another thing you could do is in the option scanner, if you've already traded Dell, you could take it out, and then it takes it out here. So here's CRM. And what you could also do too is you could take a look at it. Like sometimes I say, well, that's a lot to pay, 80 cents. How does CRM look? It's pretty, there's a lot of volatility there. It looks like it could get to my number in time. So I'm fine with that. So here's one where, we have it worth 88 cents. Mid is 88. So I'll give them like 3 cents and then force it. So this isn't one that trades in nickels. So we could just kind of force that. And we'll do our third one. Fill in that. Option scanner. So we need to click Dell again. And CRM we could click off. So we got a DG. 43 cents. So we could do 2 lot. It's worth 42. So we'll give them 40. And let's pay 46. 2 lot. Picture of it. All right.
So Matt, you have these exit alerts set up on these positions, alert 1 day before expiration.
I might rethink that. I might just, what I do is I come in and I see that, I've got, I want at least, 50% profit on these.
Yeah.
And, then I usually want to have at least a 2 lot. I know on that one, we did it for 83 cents. So my other rule is I only want to spend $1 on these. So, if you have 2, then the old rule when we were market makers and we had a lot of profit, we'd sell 25% right away. We'd sell 25% shortly thereafter. The next 25% would have to be when there's a turn in the trend. And then we just hold on to the last 25%. So I like to have 4 or 5. You could do the same thing with 5. So, that's, it's hard to know when to get out of these. So, a lot of times what you want to do is just, get out of one. Would I be devastated if I missed this whole thing? Yes. So to get out of another, that type of a thing is a good way to get rules for yourself for getting out of some of these trades. Like on that nice trade that I had in my personal account, I got out of 2 of the 5 so far.
Got it. Interesting. Okay. All right. Well, those was quite a few trades. Kind of going back to the connecting to your different brokers. Can we show everyone how to do that in the Broker Connect page?
Sure. So, right now I'm connected to Tradier, TradeStation, Interactive Brokers. You can just connect and disconnect your trading here. Interactive Brokers should go live for beta users this week, and then probably a couple of weeks we'll get it out to other people. So just emails on those. Or if you're watching in the future, it's probably already out. So yeah, you just connect it here, put in your brokerage account, agree that we could put the positions into the front end here, and it's so much easier to manage all your brokers here, because if not, I'm logging in here, logging in here, and then they're all different formats, and there's no scanning, and some of this, I still haven't figured out Interactive Brokers multi-leg strategies. So it's so much easier to trade through this. So
it really is.
Yeah.
I also want to mention, as of right now, connecting to Tradier is the only way to get live data in the dashboard. So that goes for even if you're connected to TradeStation or Interactive Brokers, you still have to connect to Tradier to get live data in the option scanner, in your positions, everywhere in the dashboard. So.
and we're working for a fix to that too. So it's pretty expensive, but we could, if we find a market data provider, we could be populating the dashboard with live data. So
Yeah.
that's on our plan.
Yeah. All right, Matt, is there anything else you wanted to show today? We will upload the option scanner and stock scanner templates so that you guys have access to those. We'll do that right after the show.
Yeah, we could show them how we do that.
Yeah. So the templates page in the option scanner and the stock scanner is a way for you to basically copy the scan that we've made on the show.
So it's just a scanner number. So I'm like, there's a copy feature here. So I just press that, and then you could tell they're different numbers. Those are the IDs that we use. So if you were to paste this in, so if I were to paste this into I'm not sure if it'll work, but if I paste it into a new, so it comes up. So you could, and then you would save this to your scans. It wouldn't be in there until you saved it. So that's how you could share scans.
Yeah, really neat way to share the scans. And we have a community tab that we encourage everyone to share their scans and share their trade ideas for things like this.
Yeah, it's a lot of fun. We started this up already. We're getting some good back and forth, so that's always fun, Tyler.
Yeah, great to see. All right. Unless there's anything else, Matt, we'll be back again next week. You guys can always email us at support@orats.com with any questions, or you can post in the community tab or leave a comment in the video. We'll see you guys again next week, and thank you, Tradier, for hosting the show.
Thanks, Todd.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.